next up, we have a young and rising star here in the mining scene joining us. It's Joanna Ponicka of Equivest Capital. A little personal anecdote. I think I was the one who introduced Joanna to Willem at our conference in November. So I'm really excited that she's joining us here and presenting on discovery investing, but you look at it a bit differently.
Yeah.
Because you come from the oil and gas space. So really, really interesting. Really looking forward to your presentation, and thanks so much for joining us.
Thank you so much. It's a pleasure to be here. I need to wait for my slide deck. Push the button, OK. I hope it's this way. Nope. The big one. Perfect, thank you. I will talk today about exploration, a forgotten key to supply challenges. And I will actually talk about both mining and oil and gas. I'm a geologist by background, but I work quite a lot with actually acquisitions and divestments of the assets, as well as I'm an investor in the space, so I can relate as well to some of the challenges that you have as investors. I think we've all probably seen this graph or different versions of it when it comes to demand for base metals, especially driven by the electrification and the battery demand. It applies to almost all commodities, so we see very similar demand picture. And the challenge that we have as an industry that there's actually very few ready-to-be-developed projects. A lot of them are not high quality, and those that are high quality are already being in the process to be developed. And common number two that we also see is that it takes 7 to 15 years to discover and bring a mine online. And I would actually say that these are optimistic numbers. And if we look here at 2030, today is 2023, 15 years, it's a long time away. So from my perspective as exploration geologist, I don't see how we'll meet this demand personally. It's just, there's just not enough good projects out there, and it will take a long time to find something. But that's a good space to be as an investor. It's also interesting to look at demand for oil and gas. What we actually see is that oil and gas operators, they produce these reports every year in terms of fossil fuel demand and what the future will look like. And from their perspective, the future starts to look greener as well. And we can see that their oil projections are going down quite sharply into 2050. And they assume that the energy will come from renewables. And apologies for that. So they're actually preparing for that scenario and cutting down their investments and have not been really doing much investments over the last years. And I think when we look at the demand for the battery metals and the supply challenges we have, these scenarios are probably also very negative, and we will see higher demand for fossil fuels that we see these days. So that sort of leaves us as a humanity in not the best space when it comes to commodities. And another aspect of that we see is what are the majors doing actually. Their investments are very low. So this graph shows investments in both oil and gas and copper going back to 2012. And in real money, even when they started going up in the last years, as Willem mentioned, the bottom of the cycle was around 2016. In real money, they're actually trending down. So they are not looking very positive. As I mentioned, I work quite a lot with acquisitions. I also have friends in industries working for majors. And what we see from the miners, a general trend of their production is going to go down. And their plan to solve that is acquire other assets. And I think the last few weeks, we started seeing some pretty large acquisitions being announced in the sector. So the way they can increase their production and match the forecasts of needed increased supply is by acquiring other companies. And similar aspect actually happens in oil and gas. So their production curves look actually even steeper. And they want to keep them a little bit, declining a little bit more gentle. So the plan is also to do it through acquisitions. And what it actually does on a global perspective, it creates decreasing production from both metals and oil and gas over the next years. So we are not really creating more supply when companies are just acquiring the assets. And the only way you can add more supply is by exploration. And I have been actually lucky and unlucky. I graduated in 2012 at the top of previous cycle, and it's been a bumpy ride down, as you saw on some of the commodity charts. But it's, I would say the exploration is picking up, but it's picking up very slowly. More in the mining sector, I would say almost not at all in the oil and gas sector. And the challenge we have as humanity, again, is the discovery rates. We maybe also these graphs, if you haven't seen these graphs, then they're important to look at. When it comes to oil and gas, there's steady decline in amount of hydrocarbons being found since 70s. So it sort of stabilized in the last years, but it's staying still at historical lows. So even when we hear about major discoveries in Guyana, in Namibia, they are still historical low numbers. And same picture is for the base metals. This is lead, zinc, copper, and nickel. And we can see that after 2012, there's been a quite dramatic decline in number of discoveries. And even the 2000s period, when significant investments been made in the sector, we had recovery, but also the amount of large discoveries has come down. So if we did this graph actually by resources, it would look more similar to the oil and gas one. The challenge that I probably spend the most time thinking about is the success rates. And in mineral exploration, they are pretty poor. Less than 1 out of 1,000 projects becomes a mine. So this is a pretty difficult number to work against when you're an explorer. In oil and gas industry is bare. It's 1 out of 3 projects, 1 out of 3 wells that gets drilled is commercial, actually. So this is much better number, but also the size of discoveries is declining. And I think for mining exploration, solving the challenge of 1 out of 1,000 is really critical. And again, to look a little bit at the past, I thought maybe we can learn something from the past, as there was similar picture happening in the 70s. And 70s were characterized about peak oil, peak resources narrative. This is the first time we started talking about this. There was an essay published in 1972 called The Limits to Growth, and that sort of spread across the media, across the television, and people realized that the resources were not finite and we'll run out of them. The demand was really fueled by post-war demand, baby boomers generation coming in, buying houses, buying refrigerators, so quite a lot of both metals and hydrocarbons demand. But very different picture to today. Actually, if we look at the 1950 to 1970, the discoveries were on the rise. Versus today, we're having big demand story, but discoveries are on the decline and at historical lows. So when it comes to the exploration, we're facing a very different picture. And one thing the industry is not really good at is tracking the success rates. And we know the number 1 out of 1,000 for this part of the period. And I was able to find numbers for 50s and 70s. I don't know how good they are, but there are numbers quoted between 1 out of 50 and 1 out of 250, depending on jurisdiction. So it was definitely much easier to make discoveries during that period than it's these days. And also the 2000s, there was big narrative, you know, the discoveries are getting deeper, they're undercover. It's not really easy to walk the ground and find a substantial large ore body to outcrop. So we need to really do things differently as an industry. Going back a little bit to the 70s and Europe, there's actually, you maybe don't know, we were the largest mining producer back in the 1800s, even when it seems unrealistic today. And it's been sharp decline for Europe up to 1970s. And 1970s, 1980s was a period of time where they sort of managed to sustain that little plateau here before the final decline. So I was quite interested, like, what was happening in the 70s that helped them to sustain that plateau. And I actually came across the paper from 1984. I give you some quotes from that paper because sometimes the past almost starts to look like a future. One of the quotes is, Britain and Europe can no longer produce raw materials to satisfy their growing economies. So I think we are here. We definitely not producing much as a continent, and we'll have to rely on other sources of metals. And they mine as much material within their own borders and blend with better grade imported ore. So actually what was happening back in the 70s, for instance, ore was imported from Africa, and it was mixed with the ore being produced in Sweden, Finland, and other parts of Europe. And I think this is maybe something we will also see over the next years. And that one was especially interesting. So in France, Germany, and Austria, mining of iron ore and base metals takes place under government subsidy. So we actually were subsidizing mining industry back in the 70s. And even when it feels a bit abstract, there are changes on the horizon happening actually just this month, or last month. So 16th of March, 2023, there is a new Critical Raw Materials Act that's come out from EU. And I would say, normally I'm skeptical about this, but I think this time we start to see at least change and harder push from regulators. So they will do strategic projects. So some of the development and exploration projects across Europe will be classified as strategic, which is supposed to help them both in terms of funding, permitting, and moving faster in terms of development. There are going to be sources of funding to develop mines. They have not been announced yet, but this is the plan. And also there is quite a hard push to accelerate permitting. So the countries are asked to hire more staff into their mining permitting departments and come up with ways to accelerate permitting. And the target is actually for 2 years to permit the strategic projects, which today sounds pretty abstract, but at least there are changes on the horizon, and it's worth to follow up on them. And looking for solutions, so what do we need to do to find more resources? From my perspective, it's quite simple. It comes from exploration, and we need to improve success rates. So even if we throw a lot of money at the sector, with the success rates that we have, it's going to be a negative business. So if we can improve success rates, I think things are going to get better for everybody. And that's, of course, a big challenge, how to improve success rates. And myself, as an exploration geologist, I look at a lot of press releases every day, and I see a lot of companies doing not so good drilling. So we could start with drilling in a favorable setting. It's getting more difficult to find large deposits, but they occur in places that have similar characteristics. So instead of focusing on minor occurrences of metals on the surface, we need to use solid geological models. And this is actually exercise we did for Australia-listed explorers that were drilling during 2022 for nickel exploration. And 53 projects were drilled. These are pure new exploration drilling. And when it comes to nickel drilling, if you want to do major discovery, you should drill on a margin of a craton. Margin of a craton is the area where all major nickel discoveries that are high grade have been made. And it's within 100 kilometers from that margin. Cratons are old continents, so that's something that actually takes 5 to 10 minutes to find on Google if you use Google to search for it. And from these 53 projects, only 21 drilled or 100 kilometers from that margin. So that's 40% of explorers following just one simple basic geological principle. And I really ask myself questions what the other 60% are doing. And we applied some other filters as well that we use in our screening process, and that took us actually to only 5 projects that seem attractive that year. So that eliminates over 90% of the projects. An interesting thing, actually, within these 5 projects, this is where one of the tier 2, so it's not tier 1, but quite significant discovery was made that year, was within those 5 projects. I think if the whole industry starts to follow good geological workflows, we can improve those success rates. Hopefully start drilling more of those 5 projects than the other remaining. You'll probably hear more about this. I just want to highlight this to you. As I mentioned, I work both in mining and oil and gas industry. And oil and gas industry is probably 3 to 4 years ahead of mining industry on the aspect of big data and AI. And I think last month we all have seen AI everywhere, especially when it comes to big Silicon Valley companies. But as geologists, I must say the geoscience softwares that we use, they were built in 80s and 90s. They are not really designed to work with large amounts of data. We are acquiring more and more data with flying drones, so data is getting cheaper as well. And you need to have proper workflows to work with that data. And at the moment, when you work with classical softwares that mining companies are working, it feels more like riding a bicycle than driving a car where a car is already available. And this is something that we have been also working ourselves in our company right now. It's been very helpful to speed up our process. Another aspect is exploration strategy. It might be simple, but only a few companies does that, actually. If you're interested, you can check out our website. I have written a blog post about this with more details. And what is strategy? So when you're an exploration company, you should have some differentiator. What are you doing differently than other exploration companies? And especially related to one critical aspect. As we mentioned, this 1 out of 1,000 success rates. You really need to have a strategy how you're going to beat that. So when you're an explorer, this is your biggest challenge to deal with. And there are some companies that are starting to design strategies in this manner, but also doing it in time and cost-efficient manner will become important as the strategies tend to be quite expensive. I have looked at probably between 500 to 1,000 exploration companies right now, and I would say I can only find a handful that have exploration strategies. I think there's a lot of mistake between exploration strategy and work program on exploration property, and we really need more exploration strategies. I think it would be really interesting. There will be companies that have already made success talking today to hear about how you went about this process. Like what was actually your strategy to getting to that success? Because I'm pretty sure there's a story behind it. And to summarize, basically we're having a bit of a supply and demand story going on in the commodity sector, both across metals and oil and gas. And when it comes to the demand, if you're wondering if new commodity cycle has started, I can tell you as somebody working in the sector that it did, as everything is on the upside and moving upwards. And as somebody that has worked the way down of that cycle, you can really see the change. And if you're not certain, then we're starting to see some major acquisitions happening. There was a bid offer put on tech resources, and this sort of acquisitions only happen at the start to sort of mid part of the commodity cycle. So the game is definitely on. And we have quite high demand for battery metals, but I think even without this, we would be facing shortages across various commodities, as we simply have not been developing and exploring for the last years as we should have. And I think with this quite scary, oil and gas industry is planning for energy transition, which means we probably going to also have problem with traditional hydrocarbon energy supply. And sort of solution to this supply problem for all the major companies is not really focusing on exploration. At the moment, it's happening through acquisitions, and these are the current plans to acquire competitors and sort of fill up your own supply gap. But this is not solving a global problem, and it's probably going to push up metal and I would say also oil and gas prices upwards over the next years. And when it comes to the supply, we saw the 1 out of 1,000 success rate. We're still using old methods as an industry that are unfortunately proven not to work as the success rates are low. But on the upside, there is more technology coming up, and I think we will see changes over the next years, but it's something worth looking at. And I think if you saw the graphs of discoveries, I think they're really scary as we not only have the demand growing, but we also are at historic lows in all commodities when it comes to discoveries. So exploration will have to kick in at some point of the cycle, and I think after the acquisitions are done of some of the major producers, so we'll see quite a lot of activity in the space. It usually comes in late, but when it comes, it really hits the sector. Thank you so much. Do we have questions? No. Yes, we do.
Questions, because we started a bit late, so we do have a few more minutes, actually, for questions. And I'm going to start off with one, because it just came to mind looking at your supply side chart here. It's junior explorers using old methods proven not to work. You hinted at it. They're using old software, for example. But what are some of the other methods that the companies could improve on?
I think one of the things you see, the soil sampling, also the assays, these things are very inefficient. They take months to get that data. Like sometimes you wait 6 to 9 months for the results. It doesn't really help you speed up your process, and it's not cheap. And there are technologies out there that can speed it up. So we've been looking at ourselves as well on some of those aspects. But I think the entire process, it has not changed much since the sort of 80s and 90s. We added some more geophysics tools on it, but we have not really speeded up and rethink that.
What's your honest opinion on AI?
My honest opinion is there's always double sword, right? So there's a lot of things that don't work, and you sort of produce some shiny blob. We've seen this a lot in oil and gas in some of the early companies. But also, if you can sort of combine it with still using geologist brain, big data, and understand what the models are doing, it will speed up your processes quite a lot and improve efficiency.
Absolutely.
And I don't like the modern, like the softwares that we use. I really don't like them.
Lots of room for improvement, because Leapfrog and all those are
Absolutely.
older data-based projects, right? I've noticed new commodity cycle, battery metals. What are some of the metals you actually focus on? Because you used nickel as an example. I haven't heard anything about gold, for example.
Yeah, it's a good point. I'm definitely focused more on the base metals. I also do gold. I think there's this saying in the industry, like once you start working with nickel, you cannot go back. And I started working with nickel the first year, and it's a very exciting commodity to work with. So I love to work with. And I think usually what we see when the nickel discovery is made is so rare that the price moves so fast. So the investor side of me
loves it as
loves
well.
that as well.
Phenomenal. Do we have any questions from the audience for Joanna? Did you hear it?
Yeah, I think I heard your question. It's a good question. I would have to go to too much detail. I share some information on my social media, so you could follow on that. I don't want to say everything, to be honest.
Give away the secret sauce.
Give away all the secret sauce. But I share quite a lot of tips and tricks if you follow me on social media.
Yeah, your Twitter channel is a wealth of knowledge. Equivest.
Yeah.
Equivest Invest.
Yeah, that one.
So make sure to follow. You also give short courses online as well. So I highly recommend those, especially if you're newer to investing in junior mining and exploration. I highly recommend that as well. Do you have any more questions from the audience for Joanna?
Question?
Oh, Willem has a question.
Thank you. Nice presentation. You didn't touch on another important topic, and that's so many people retire, so many geologists retire. You're one of the geologists of the younger generation. Isn't that one of the worst problems of the industry?
I would say it's definitely one of the top 5 problems that we have. There's not many people who've been hired over the last 10 years, and we definitely have the skewness on the sort of 50 to 60 range that will retire. But I am also a bit more positive because, if we can automate some of the processes, we do have more technology these days, both in terms of producing mines and exploration. Maybe it can make us faster and more resourceful. But of course, it's going to be a problem down the line. There is more sort of universities starting to flag the issues, and people are starting to come back. So I think there is going to be a next generation, but there are gaps and shortages.
We have one more question here.
Yes. I wonder, since 1900, a lot of metals came out of the ground, and we saw the graph going down from, 50s, 70s down. Mm-hmm. Isn't it so that a lot of metals are being recycled last 50 years? So that's maybe a reason for a crash.
It is definitely recycling, so I think we're improving every year on the recycling. I'm personally, in favor of recycling. If we can recycle, that would be fantastic. We don't need to have all the environmental discussions. Even when I love exploration, I still believe that's the better outcome. The challenge we have with recycling is the costs, and especially the big part of the cost is energy. So when we don't have our energy solved, which we don't have these days, then that's not really helping us with recycling. So it's sort of like you have to solve the energy issue, which is either mining a lot of metals to produce renewables, nuclear, hydrocarbons, whatever you want, but that is actually key to having more recycling.
We have one more question in the back there.
I
started in 2012 with a PhD. We had, 25 students in our Earth Science program. And from 2012 to 2016, of course, the downturn happened. 2 years ago, there were 4 students. And so we're seeing huge problems with trying to get geologists on the ground for the early stage exploration work. And I don't see that changing anytime soon. But when quantities do start rising, we'll see an influx of students again. But it takes 5 years to get them through the system.
Yeah.
And then they're junior geologists, right? So these swings in the industry are creating big problems.
Absolutely, and I graduated the same year you did, 2012. So it's been a ride, but I think it's also like from my year we were 80, and I did the oil and gas industry even when I went oil and gas degree when I went to mining. From 80 people, we normally would have 90% working in the industry at major operators and so on. It's only 4 of us that works across the industry. The rest of them has some other jobs. So that's been tough years for those people. And I think that also discourages a lot of people if you can choose between normal job versus cyclical job.
Normal job.
You should probably choose a normal job unless you're really passionate.
Fantastic. Joanna, thank you so much for joining us here on stage. And to make sure to follow her and give her an extra hand of applause. Thank you so much. Thank you so much.